Wednesday, July 1st, 2020, Maneco 64, home of alternative economics and contrarian views. Today I'm going to focus on the markets, in particular precious metals. I think we're getting to a point where not only bullion, gold and silver are pointing to much bigger moves higher, and by that I mean the national fiat currencies are moving lower. We're seeing currency debasement. Markets don't work, how can I say, right away. They don't discount things right away when news comes out, like all the inflation that we're seeing from the central banks. It takes a while for things to evolve. But generally speaking, I think precious metals have done a good job this year. For example, we're up about 18% on the year in gold in terms of dollars, US dollars. And if you look at the major indices in the stock market, the Dow, for example, is still down almost 10% year to date. We're down 9.5%. S&P is down 4%. Yes, the NASDAQ is up 12, but I think that's an anomaly. It's just a few big companies, as we know, that are doing really well. The small caps are down almost 14%. So we need to keep the bigger picture in mind and look at things from afar, not focus on the all the chatter out there, especially in the mainstream financial news, from people tweeting about the stock market as well. And I'm not going to say who that is, but you probably figured it out. So yeah, I'm going to look at the technicals in precious metals, at some really interesting charts. I'm going to look at copper as well. That seems to be moving up a little bit. And copper is very important in terms of the commodity sector. Oil price, of course, has rebounded quite a lot as well. We're still at low levels, but it's all pointing to the fact that we are seeing maybe a pickup in the whole commodity sector. Of course, gold has been leading this more as a monetary commodity, but now I think it's pulling along or dragging along all the other commodities. Again, I'm going to emphasize this chart here from Incrementum, and I'm going to put a link to In Gold We Trust report in the description. I've done it before quite a few times, but I think it's really good for people to read this to get an idea of what precious metals, gold and silver, are and how important they are. So here's this chart. We're still at very low levels for commodity. So the risk reward is quite good here. I don't think there's much downside for commodities relative to, of course, paper assets. In this case, in terms of the Dow Jones, it's a Goldman Sachs commodity index versus the Dow Jones ratio. Yes, it could stay low for a little longer, but I think it's highly unlikely, seeing the fundamentals that we're seeing. Yes, we have this crisis out there, but I think hopefully the powers that be are losing control of this. I don't think it's going to be as smooth as they think. I think a lot of people are waking up to this, and they're not having it. So I think the more and more people don't consent to doing what these people want, the harder it will be for them to implement their fourth industrial revolution, their AI world. We need to go back to normal, of course. That's a different story, but let's look at the markets and the technicals. So on King World News, some of you might read King World News. I do once in a while, and I have had for years. I have to say, I don't agree with everything that comes out of King World News, but he had an email, I think a few days ago, from one of his readers. This person noted that on a quarterly basis, gold, if it closed above 1772, it would be the highest quarterly close ever, even higher than in 2011 and 2012. So yesterday was the last closing day of the quarter, second quarter. Gold started out around 1770. It went off a little bit during the day, but it closed very well around 1780. So this is looking good. It means that the bullion banks, I think it was Alistair McLeod who also talked about this the day later with Eric King. He said the bullion banks, they do a lot of their accounting for end of the quarter. So they're always really big shorts in gold futures. So this is a good signal, technical, and also maybe accounting wise for the bullion banks. It's going to be harder and harder for them to keep this short position. So they're going to have to short cover. And so it's looking very good here. I think it's only a matter of weeks until we make an all-time high in the price of gold in dollars. And that will be the confirmation for all national fiat currencies. And with that, I want to show you a very interesting chart, especially for my viewers in the UK who, of course, think in British pounds, who earn in British pounds. And and it's a price that we don't talk too much about. I do, of course, once in a while. It's the XAU GBP, or the gold price in British pounds. And I've been looking at this chart recently, and yesterday I decided to do this little analysis and extrapolation. And of course, I'm not saying this is going to happen perfectly, but if you look at it here, this is a 3-year chart. It goes back to around 2017. But since last summer or late spring, we saw a big move in XAU GBP higher from 970 all the way to 1280. And that was an important move at the time. That was around June last year because we broke the all-time high in XAU GBP from 2011, which was around just below 1200. So we went up to 1280. That was a leg up of 31.9%, as you can see in the chart. And then we had a correction. And that's normal in the market. Markets always, after making new highs, a lot of times they come back to retest the old highs. And in this case, we went even further down. And it's always painful to see these moves because you think, oh, we made a new all-time high, now it's coming back down. That was a correction of 15.17%. As you can see, we traded just below 1100. But since December last year, we've gone almost straight up. Of course, this is a weekly chart. It doesn't show the daily moves, but it's almost a straight line. And earlier, I think it was in May, we made a new all-time high at 1456.70, as you can see. And then in June, we had a big correction lower. It was more to do with the pound going up quite strongly against the dollar. But be as it may, the correction wasn't even that deep. We came back to like just above 1300 to 1314. So what I'm trying to say here, the key level is 1456. When we break through that level, we could see the continuation of this third leg up, I would say. And if I take the average of the other two, it's a 33% move. That would take the price of gold in sterling to around 1750, as you can see there, 1747. If you use an exchange rate of £1, $1.20 or thereabouts, it would mean gold at 2,100 US dollars. So I thought that was interesting to look at. Let's just see where gold is right now in British pounds. Let me check here. The live price. Well, we're at 1444.78. So we're only about 10 pounds below that all-time high. So it can be a little sticky. We could even see a breakup above that level, the all-time high of 1456, and then a correction lower in the short term. But I think it's a good signal. So I wanted to show that to my UK viewers. I've been talking about in the last month about the miners, because a lot of you want to know about the miners. And I have put a bit of my savings into the miners, into the GDXJ and the GDX ETF. Not a huge amount. I still think people should try to keep as much of their savings outside the system. But I do admit that there are opportunities out there and the markets are still functioning. And I think they will continue to function for now. And yeah, it would be silly for me personally not to try to take the opportunity. And I have to say, they're doing quite well for me. Both GDX and GDXJ, my profits are fairly high right now, percentage-wise, and also in the Tanzanian royalty exploration, Jim Sinclair's company, that's doing well as well. Personally, for the GDXJ, I'm looking for a move in the next 2 to 3 months, and hopefully I'll take some profit then. You need to have an objective in terms of profit as well, or else it's very dangerous. You don't get out and then the market comes back and you lose all your profit. You can't get married to your position when you're trading. You have to have an objective. Yes, I'm doing quite well right now. It's up over 10%. My position in GDX over around 15%, I would say. GDXJ, maybe a little less, but I'm holding on to it. I think there's still more upside on those. And the Tanzanian or Jim Sinclair's company, that's more of a longer term thing. But I can always change my mind on that if the profits get quite interesting. So let's look at the GDXJ chart here on Yahoo Finance. As you can see, we made a really good closing. We're not at the high from the last five years. We're very close to it. It's at 52.50. So we closed yesterday at 49.58. So we're very close to that. And if you look at the longer term chart, there's a lot of upside potential. As you can see, in 2011, this GDXJ ETF was above 175. One gold was making an all-time high at 1900. And here we are, almost $100 from the all-time high in gold, and GDXJ is still here. So I think the risk reward favors being long this GDXJ. I'm not advising people, of course. GDX, the same story here. If you go back 5 years, we're actually right near the highs. We made a high earlier this year. We're still not there yet, but I think it's only a matter of time before we break through there. What we've got in the precious metals market and commodities, I would say right now, is momentum. So there you go. Just wanted to show you the Goldman Sachs commodity index. That's starting to pick up as well. It's still off the highs of the year, so there's a lot of upside on that as well. And now let's look at copper. Copper is looking very interesting, and copper is an important commodity in terms of the overall commodity markets. It's also a sign that we might see a strong pickup in the economy. Copper is used a lot for construction, for real things, for tangible things, as I've been saying. So here we are, copper picking up really well since the low in March. It's still longer term, there's still a lot of room on the upside as well. The other chart I wanted to show is the Dow to gold ratio. So right now, we're around 14, low 14s, around 1430. The Dow gold ratio, you can see that the Dow topped in terms of real money or gold in September of 2018, around 22 and a half. The key level here, of course, is going to be the low earlier this year is just above 13. So that's the Dow Gold ratio. So yeah, it's all looking pretty good for the precious metals. For the traders out there who happen to be long the miners or the bullion, and what about people that just stack? Well, there's nothing changing here. Longer term, it's the place to be. All the technicals do is confirm the fundamentals, and the fundamentals are still that the national currencies are going to continue to be devalued, debased, inflated away. And of course, when the dollar price of gold makes an all-time high, and I'm prepared to say that when it makes an all-time high above 1920, and I think we will, it will confirm the whole scenario. Not that it needs much confirmation, I think. Yeah, of course, there are those who think gold is going to get to 1800 and then collapse, like Harry Dent. That's what he said in his latest interview. He sees it going to 1800 and then turning around and going to 950. I don't think that's going to happen. He could be right. You need to be a little bit humble and cautious about things, of course. Nothing's ever certain in life, but in my opinion, from what I've studied about money, precious metals, I think we've got a very good chance of doing so, of making a new all-time high in the price of gold in dollars. So to finish off, let's quickly see where the markets are in general. It's 8:51 a.m. London. So right now, spot gold is at 1787.60. It's up about $8. The high has been just below 1790. Yesterday, there were people saying that gold had broken out above 1800. There are headlines. Well, that's the August gold future. I look at the spot price of gold, the physical spot price of gold. And of course, in pounds and in dollars, people are paying a lot more for buying the real thing, a coin or a bar. I mean, this is just the paper price, really, the spot price, even though it's supposed to be physical. But this is what the dealers, how can I say, trade off. Of course, the real price out there to buy coins and bars of gold and silver depends on the premium. The premium could go higher. Who knows? It probably will once we make a new all-time high in the price of gold in dollars above 1900. That's my opinion. I think there's a good chance. Silver is continuing to do quite well. Silver outperformed yesterday, outperforming a little bit today here. It's up 11 cents or 2/3%. We're just below 1830. The high's been 1835, so that gold-silver ratio is comfortably back below 100. I think that's going to continue to drop, so silver should continue to outperform. So we've got the Dow future basically unchanged, up a couple of points. Of course, by the time this video is uploaded onto YouTube, it could be up 200 or down 200. That's the way the markets are trading right now. S&P is up 3.5 points, and the NASDAQ 100 future is up 11. The FTSE, for my UK viewers, is down 22 at 61.62. Sterling or cable is down 0.2% at 123.72. The euro is unchanged virtually at 112.28, and the dollar is down 1/3 versus the yen at 107.60. So to finish off, WTI crude is just above 40. I said that 40 level is important. So we're up 2% at 40.07. And the 10-year yield has backed up a little bit. We are up about 3 basis points at 0.68. So right now we're kind of in the range between, I would say, 0.65 and 0.75 in the 10-year yield. So if you enjoyed this video, Make sure you hit the like button. Please share it far and wide. Think about subscribing to the channel if you haven't yet. And you can also follow me on Twitter, Facebook, Parlay, which is a really interesting new platform, well, relatively new platform. It's like a censorship-free Twitter. I recommend that platform. I joined less than a week ago, and there's quite a few people on there already. So yeah, go check it out, Parlay. And I wish you all a great day. Take care. Bye.